morning, everybody, and welcome to the European crossover webinar. We just had the some Eurozone data. We'll take a look at that real quickly. This is on the Eurozone inflation. It came in right on spot with the Reuters poll, and just a hair above what had been prior. Also, we had Italian inflation going to come in. It's going in. The key event, or what that most people were looking for, was the BOJ. And they stood pat, and that actually brought the dollar yen down, but then the dollar yen rallied back on a potential of a budget point that they made. Now we'll go and take a look at it just real quickly. It says the dollar bounced against the yen on Friday as a report that Japan may unveil a supplementary budget, lifted risk as appetite, and helped the greenback for earlier losses. The currency had dipped as low as 2029 after the BOJ stood pat on monetary policy, disappointing some speculators who had bet the central bank would expand its already massive stimulus. The greenback received a reprieve, however, as Tokyo stocks pulled out of the red following a report by the Nikkei newspaper that the Japan's government is considering compiling a 3 trillion yen extra budget in preparation for the Trans-Pacific Trade Pact. So we're going to take a look at the dollar yen real quickly to see what all transpired on that move. So we had this quick dip on, because the thought was potentially whether they would do it or not, because we talked about this the whole time, how the market was going to price that in. But when they didn't go on and announce any additional quantitative easing, that sent the dollar yen going much lower. But then on that report about the supplementary budget, it sent the market shooting right back up here, almost to 2150, and since then we've gone and lost 100 pips because it was a pretty fantastic short. I was not up at that time. I was super tired, and I was thinking, they're probably not going to do anything, and who knows what's going to happen. So, unfortunately, I think a lot of traders might have been triggered in here to sell the dollar yen short, and hopefully they didn't get the rear end squeezed out here. Like I said, I was just too tired, and I was thinking I'm just going to go to bed. Ultimately, I didn't think that they would. I thought it would end up being a dead affair where it moved some, jerked around, but it was a pretty decent sized action. If you were up at that time, I chose not to be. But we're going to move into some other markets, and we're going to take a look at the 2-hour just to get an idea of where we stand now on the dollar yen in light of what transpired with the BOJ's decision. So let's go and move into the 2-hour charts. So we made this run back up here. We've been in this zone, and they've tested the upside of this zone, but they did go in and fall a little bit short of these recent highs. But they tested this zone that we've been talking about, 2130 to 1882. So the next key support is going to be 2025, which already made an attempt to test that, so they may go on and overshoot that. And I'm thinking is that people are probably going to be thinking that the next key target is going to be this 1969. And that probably makes the most sense. I guess if you look at it from a Fibonacci perspective, $1977 would be the 50%, which would kind of confluence with that 1969 ultimately, it looks like they may take a shot for 1938 overall. Hopefully, some people didn't get skunked out on this, on this whipsaw action. It looked like, we're going to be going south of the border, and then that Nikkei report comes out, Nikkei newspaper, about the supplemental budget ahead of the Trans-Pacific Trade Pact. So that got them whipping up here, but I think probably, I guess, like I said, I wasn't up at the time, but I'm thinking as people said, well, it's still not going to be QE, even though they announced that. This is still probably a pretty good short. I was looking for, if they did do additional quantitative easing, I thought a great short was going to be this 22.10. I had this already marked off just above 22, which would have, obviously generated some short covering and taking us here to that key level here at 22.14. Obviously, they didn't announce additional QE, so we didn't get a chance to go up to this key level. So we're still playing within the zone of 2130 to 1882. And this 1969 is probably where they're going to make a run for and take out those lows. And we mentioned that I think it's 1977 is the 50%. So it makes sense that they'll go for 1969 overall and probably try and stop out some people at this 1960. Probably, I'd say what they'll probably ultimately go to, if you are short, is right in here's where you're going to find some support, right there, which is really right around 1950. So maybe they overshoot it a little bit. So that's probably what we're going to go to overall. I'm not doing anything in dollar yen. Haven't done anything in dollar yen for a while. I wanted to go on and put that, take that position on, but it looked like in the last couple of days it probably wouldn't happen, and I was tired as hell, so I wasn't going to go on and stay up, which I thought was going to be a disappointing event as far as trading action, but it really wasn't too disappointing. For those that were up at that time, were able to go and take advantage of some very nice moves. So let's go on and move into some other markets here. We're going to take a look at the euro and get into the SPOOs, the gold, and the crude, which is primarily, going forward. I want to get the show steered back to what it was primarily going to be for, which is going to be, day trading / scalping. And I'm just going to stick to, if someone asks me about the Kiwi or something, we can certainly go and look at that from a, analysis point of view. But primarily, the only markets that I know, the only markets that I'm trading going forward are going to be euro dollar, dollar CAD, dollar yen, SPOOs, gold, and crude. So if someone wants to look at something like the euro pound, we could certainly go and take a look at that if someone wants to ask for it. But going forward, pretty much just going to go on and limit my analysis. But it's going to be more focused on what's the day ahead, where are we looking for levels, and pretty much kind of even up the time among those markets. There'll be times when we don't really focus that much even on dollar yen or dollar CAD, but push more of that focus on the euro dollar, gold, SPOOs, and crude. And so let's go on and move in here to the euro dollar. We had a nice bounce back, and this bounce back has not been, a surprise, because I talked about this on the FOMC, post FOMC, right when this market was coming down here, the dip to the 915. I said it was a very interesting level. We already talked about this 940, and the market had held overall the 929 on this move lower initially. Obviously, this is on a 2-hour chart, it's not going to show that. But when we finally broke through it, probably a lot of people thought, it's over. We're really going to lean to the downside. And as I mentioned at the time, was that from a positioning standpoint, there was nobody really left to sell to. At this point, this was all about new positions that were being put in the market, and we talked about that yesterday. And why I thought that the downside was very quite limited, and we would go to a counter rally and then probably fade that. And we saw that, although initially it fell short of my expectations, I wasn't able to take advantage of it. And then I did put limits in at 10:08, and then overnight I saw it made it up to like 10:15, but I had already canceled those. But I did go on and get short on a scalp, and I've already gone and covered that, so made a couple of bucks in there, not very much whatsoever. but I definitely wasn't going to go on and buy the euro, even though I thought it was going to go on and come back. But we started to squeeze a little bit higher. You saw that late in the New York session yesterday. So where are we going to go to? I think there's a good chance we'll make it up to this 1036, and we're going to go on and take a look at some areas that we're at right now, which are already key resistance that I was shorting up against, but only on a scalp. So let's go on and move into the 30-minute. And sometimes it's easier for me to drag it out like this as opposed to making it wide open like this, because it's hard to get a perspective because we've got prices all the way up to 114. So that's why sometimes you're just going to see me drag the screen down so it's a little bit more closely aligned with current price action. But anyway, so getting back to this, we'll go on and take a look. We talked about, that 915 being a very nice area. Obviously, here on the 10-minute, we had it, on the 30-minute, we have it marked off as 910. The levels are going to vary a little bit depending on the time frame you're looking at, and why I look at different time frames to give me an overall perspective of where I think that the market is going to, or where it's going to go in and find resistance or support. So we've gone and worked our way up here in this market, and we've come into a very good level. It's funny that we were talking about 915 post FOMC, and here we are at a very nice level, which is 1015, which is 100 pips higher. Now, the key thing about this is that we have a couple of fib confluences right here, and we'll look at the significance of the 1015. You can see here coming right across. It was, a little bit of resistance here, then it became support. Nice battle zone, and here we are, 1015 coming across. Okay, so let's go and back this up a little bit. So 1013 is going to be the 23% of 897 up to 1388, and we can get a little bit, see if we can pull out for a little bit better perspective, which is up here. See if we can actually further than that. Right there, it's turned 1388. So this actually, at 1013, I should say, is a 23% of that move. That's also confluent with 1020, which is a 61%, once again of this low, 897, to this recent high here at 1096. So we're seeing some nice resistance here, a confluence of resistance. I've scalped it, was no big deal. When we got up there, I'm thinking, well, they're probably going to fade them into the Eurozone data, which was released at the top of the hour, because I'm thinking the Eurozone data has been disappointing every time. So, because I was thinking, should I short it now, or will they take a run up here to 1034? I thought, it's unlikely they would take a run up here to 1034. Just ahead of that Eurozone data, which is probably going to come in weaker. It actually didn't come in too bad. So then we faded back. I was able to go in and scalp out of that. So, but like I said, it's been disappointing because the moves back up here have just been falling short by just a few pips. Even the one overnight, as we came in, right before I went to bed, I had a limit at 1008, and I said, forget it. And then we went up to 1015. And then we pulled back, I think it was like into the 80s, and I was thinking, oh man, I should have gone and kept that position in there. So it's been, really thin here for me in the euro dollar, but at least I haven't put myself on the wrong side of the market. So like I said, I think that we can make a move, whether we get there or not. I think we make a move up here to this 1034. I think there's a decent chance coming into a Friday, you might have some weak shorts, and the market may want to see if they can go and press some of those weak shorts and come into this 1034. I think this 1034 to 1058 is going to be a very nice zone. We may be able to, obviously, got this marker here that looks a tad bit bearish, but the way I look at it is that the market has done a lot of work in here. So I think it justifies it to come up here and make a run towards 1040. Maybe it won't, but I'm thinking is that as I said, there were no new positions. I mean, these are all new positions that were placed down in here. It wasn't like there was anyone left to puke up. They already got, all the bulls already got kicked out of the positions. So with the work we did here, my thinking is that we can certainly push higher. Maybe we can make it up into the mid 1040s. But I think here at 1034, if you've managed well your positions and been careful, you know, you've taken advantage. Fortunately, like I said, unfortunately, I should said, is that, you know, this market has been kind of falling short. So I've missed some little, they haven't been great trading opportunities, but some nice overall two-way action. But I think we could squeeze higher, maybe take it up. We might even make it up into like 1042-ish, possibly. I think if we can squeeze past this 1020, that's going to spook some people. But I think any runs up towards 1040 is going to be great to initiate positions there. Now, also another thing that you might want to think about on the backdrop of your mind is next week we have the unemployment report. There might be thoughts that it might come in a little bit less than what most expect. So maybe we can push up a little bit higher. But overall, if you put on these shorts, as I said, I think the market will sell the euro dollar with impunity. But you want to go on and have an overall longer term target so you don't get wiggled out of your position on this day-to-day stuff. Okay, we're going to go move it here into the SPOOs now. And the SPOOs came into a very interesting area right here. This is an old bias pivot. And you know, you hear me talk lots of times talk about the bias pivot. We talked about this back then. Here's 1875. I talked about this bias pivot, and this was back since the beginning of the year. Another key bias pivot, and it wasn't as key back then as 1875 was, but another key bias pivot, you can see the market is pulled down very nicely from this level. I'll be honest with you, I wasn't even up at this time, but I kind of wish I was because I would have liked to have taken that. Although, in all honesty, I probably would have been out of it. But this 9250 is a bias pivot. See if we can pull this back. We might even have to look at this on a 4-hour chart to get a better perspective. Let's pull this back out for a 4-hour. You can see this 9250 has been very key for a very long time. Look at that. You see how the market is traded above and beyond that. It's been a bias pivot in the sense that, and I've discussed that with y'all before, the key thing is when it gets above it, the market launches. Maybe it does a launch from here to Venus, but it launches. And then the market comes back to support, and if it falls below it, it accelerates to the downside. You get a battle zone, it launches. It falls apart, it accelerates to the downside. Battle zone, it jumps above it, accelerates, comes back down to support, and takes off. So what I'm trying to show you, and this is back since April, and why I marked this off as what I call my pivots. And when I say pivots, like I told you before, is I don't use a pivot like they did on the floor, whatever they do it. I think it's you look at the high, the low, divided by 3 or something like that. I remember reading about that way back when, and to me it just seemed like too much crap to go in and deal with. So I just never bothered using what they call in the I guess you'd call it standard form or whatever, the way someone uses a bias pivot. The way I do it is I'm looking visually at the market, and do I see the market respecting that level? And the more longer it stays, the more significant that bias pivot is. So you can see here, once again, we accelerate to the downside, then we come back. Once we get above it, we accelerate up to the upside. Then we come back, and then there's a battle zone. And when we can't get past this 2092.5, we accelerate down. And you can see this taking place all the way through. We make it up to the all-time highs of 2134, and guess where we have a battle zone on the way down? 9250. Okay? So I'm just trying to, just for perspective, so that you can see what, at least what I believe is a very key level here, a key bias pivot, okay? So as we move forward, and you can see how the continued significance of this 9250, we'll actually go and look at the last time it was dealt with. Put this out. After they had come down here to 2047, the market has sold off and found a bottom with a hammer bottom. We'd come up here and we challenged that 2092.5. And where did it, I mean, we challenged it and you can see the market pulled back. Pulled back a decent amount. We pulled about 20 handles. We came back up and we challenged it again. Came back down, came back about 15 handles. We got above it and the market starts thinking, hurrah, we're finally going, we're blowing and going to the upside like a marathon runner. And then all of a sudden the market just runs out of gas because it was already starting to lose its momentum. So as the market slides down and we challenge 2092, people thinking, whoa, well, this doesn't look good. We're going to start to slide. So we start sliding and we accelerate. And from there we accelerate about 25 pips or 25 handles. And then we run it back here to 2092.5 and we run out of gas again. And then it's like, man, this show is over. Time to head for the exits. And sure enough, that's when they started moving higher, moving lower. So once again, this is the last key significant battle was 92.50. Now you know why I think 92.50 is so key. Now we fast forward and look where we went to, 92.50. I heard a lot of people talking about 2100. Well, before you can get to 2100, you got to go through 92.5. And as you can see, my friend, 92.5 is one ball buster of a pivot level, or bias pivot level. And so we got above it, and it's on a 4-hour. Pick it back to what the time frame I look at, which is 2 hours. We got above it, and you can see the market started kind of like weaken a little bit, or just kind of like holding its own. Although you see the market's been holding overall pretty good, but it's kind of like not looking so good, okay? Now, if you look at it, at this from just the body, look at that. And I mean, the body matches tit for tat. You see that right here? So at this point, it looks somewhat bearish on the 2-hour. So we're going to move it into the 30-minute. So this was this key bias pivot, this 92.50. We had 85.50, a little bit of a battle zone, 85.50. We were able to launch it up to 92.50, the bias pivot. But now, since then, we've lost nearly 8 handles. Let's move into the 30-minute. Now here we are in the 30-minute. Let me open that up. And I've got all these levels marked up because they, like I said, the market is just moving from level to level. What you look for is the significance of a level. Like, I'll give you an example here. We've got this zone here from 85.50 to 90 here, okay? So I've had this zone since forever, it seems like. But you can see as the market ran up towards this bottom of the zone, 85.50, you can see that the market went and pulled back, almost to about 73. What I try and look for is when I see it come into a zone or a level, then I look for signs of divergence to see let's say if it's working lower, is the market starting to turn around a little bit? Is it starting to, it's starting to turn around where I can step in and buy this market? Now, one of the key things I've talked about is our exponential moving average. And you can see here, obviously we got the breakout here, and we talked about this being one of the most powerful signals that the way I look at the exponential moving averages. Okay, so we get a buy signal here, and the market's trudging along, it's moving along, everything looks okay, and the market runs out of gas and dips. So it looks like, hey, you know what, this market's going lower. Now we're trying to sell signal. But look how quickly it comes back up. And I've discussed that before, is one of the most powerful signals that I see, and I just don't use my EMAs as much, is that when you get a crossover to whether it's a buy or sell, and then in short order the market crosses back, what it's showing you at that point is it's not ignored, but it's gone and fought off the direction and change. It's reasserted itself. So when it does that, if you look at it and what it means in real world trading, is people have turned around and gotten short, and they thought, okay, now we're going lower. How much further can we go and move down? We're going to challenge 2000. We're going to go challenge maybe 1992, and then the market comes right back up, and all those people are forced to cover. So you get great buying, and then anybody that was bullish but haven't added on, they add on, and then you get this acceleration. You see this? I see this every time across different markets. If you get you change in direction, and then in very short order, it flips back the other direction, the ensuing move is generally very, very powerful. And you can see here that the exponential moving average held as we took this dip up here. Now we've run up higher. Now we're down 8 handles now, or just a little over 8 handles from the high. And that's what I'm saying. You can see the significance of this 92.50. I mean, if you think about it, we've had a wonderful rally here in the SPOOs. I remember when we were in the 1865s, and I was talking to this one trader via DM, and I said, you know what, this is a fantastic area to buy the SPOOs. We're going to see one heck of a rally. We really are. And the guy was like, well, I don't know. I mean, I go, hey, look, the U.S. is in China. It's going to be a big rally. I'm not saying, and I even said, I'm not saying we're going to go back to 2100, which is funny because we almost went to 2100. But I said, I can see at least 100 to 125 handle move, which would have taken us from the 1865s, which would have taken us up here to 19 something. But obviously the market shot well beyond that. But like I said, when you look at it overall, it's been one hell of a move. And this market just really needs to, get some rest here. But we did come to a very key bias pivot, the 92.50, and I've gone and given you the reasons as to why this is a bias pivot. Now I'm going to go and move into the 10-minute. Was there anything that was giving you an idea that when I saw this when I woke up, I was like, damn, I wish I would have seen that. That would have been a hell of an area to go and get in, at least I think. So we'll move into the 10-minute. And you can see here, we had a nice graveyard little Joji. And it's only on a 10-minute. But what I try and look for, and here's my 92.50. I'm already thinking this is that key bias pivot. So when I see this, I'm thinking, man, this is fantastic. Unfortunately, I was asleep at the time. But I'm thinking, man, can you ask for any more? I just laid it out for y'all. The significance of the 92.50 and how far this market has rallied. Like I said, I'm not a swing trader. So, I mean, to be honest with you, when I woke up, I think we were already at 88. Yeah, I think we were 88. By the time I was looking at it. I was up for a little bit, but I started focusing on it. And I said, you know what? You could probably sell it, but I'm not going to sell this damn thing 4 handles from the high now, or actually a little bit more than that. And I go, it's probably going to work lower, but so be it. But like I said, you can see this for a swing trader. I mean, can you ask for any more? At the key bias pivot of 92.50, we get above it. You know what this reminds me of? Although it didn't move the same, this reminds me of when I got short on gold at 91. And I said, I looked at the different charts, and I said, this is a fantastic short. And we fell, and I thought I was doing awesome, covering in the 84, and the market fell, to almost $73 almost, $74. So it actually fell $17 in very quick order. I don't expect that in the SPOOs, but I'm saying you couldn't ask for anything more here. So we're going to move into a couple other markets. And actually, it's already break time, so we're going to catch a break, and then we'll take a look and see what's happening in crude. I guess we can just move into that right now, and we'll take a look at gold too. Okay, we'll catch y'all back in 7 minutes, and we'll take a look at crude, and we'll also take a look at gold. If anyone has any questions, go on and ask me. But like I told you, I want to get this show focused back to where it was originally, which is I'm only going to be tracking three markets: euro dollar, dollar CAD, dollar yen, SPOOs, gold, and crude. If someone wants to ask me, like, where's the Kiwi or the Euro pound, we can certainly take a look at it. But just realize that unless someone asks me about a particular market, the markets I will only be covering, because that's the way my trading is going to be euro dollar, dollar yen, dollar CAD, SPOOs, gold, and crude. And thanks for joining us here on the European crossover webinar. Okay, everybody, welcome back to the European crossover webinar. And we're going to go and move into crude, and you can see where crude is finally starting to pick up a little bit after a very quiet Asian session. And we'll take a look to see where we were finding support on this market. We'll move into the 30-minute. And why I think it's important, if you're day trading or scalping, to go in and look across several time frames. I had someone ask me yesterday, day before yesterday, why don't I just keep everything on one chart, and I guess just change the time frames around? And the reason I do that is because sometimes something will develop, and if I'm looking at other markets, I may not see that develop as quickly. Now, where I would see the support here is, remember I do my resistance and levels across the body, and you can see right here coming across here, right there is where we found support here. Put this little trend line here, right there. Now, it was quiet across Asia, but when you come down here into this area, this is where you can start to assess risk. And when I say assess risk, it's assess of getting long on a position, to go in and say, hey, look, is there something there that potentially I see that maybe finally the market will start to go in and turn around and start to go in and work higher. So this is what I'll go in and look for, as we go in and test back across, in this case is going to be support, which is previously resistance. You see these bodies coming across, and that comes in here at this 45.50 area. Now we can take a look at it a little bit closer on a 10-minute, where I go and use that to go in and jump into positions. And you can see here, as we move into this 45.50 area, we're starting to find some support here. And there's not anything definitively that I could look at to say, yeah, that's an area of support. I think it's a great area to go on and buy. But when I look across the 30-minute, because there's, the bars on the 2 hour are so big, that I try and look to see if there's something that's developing that's going to give me that idea that this is a pretty decent risk-reward area to come in. And what I look at, when I took a look at this chart, and on Fridays we kind of focus a little bit more on learning. I see this as an area of where the market, I don't want to say found value, but there was a lot of trading going on here. And if you see here, this is just all drip, 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 drip. So even if you come down here, there's not really anything you can hang your hat on. But when you drop down into this area, you can see that the market is finally, they said, enough is enough already. So we get this rally coming back up, and then the bears are going to, put their pressure on, and the market comes back down again, slides back down the pole. And we actually take out the lows. So anybody that got long that may have put their stops below the market, they get tripped out. And notice how the market stabilizes here, right in there. So no one really has any control, and then maybe bears start to think, maybe we have gone too low. So the market gets a little bit of a rebound. We come back to test this area, and we don't take it out. From there, then the market going to launch higher. So moving forward to where we are this morning, remember we talked about this being an area of support here on the 30-minute. So then when you take a look at that, you go, you know, we're coming into that area where there was quite a bit of a battle, and the market has come off quite a bit, and it looks like it may have come off maybe far too much. This is a decent area now for me to go on and maybe take a shot at a long. Well, like I said, once again, there's no guarantees, but what you're looking for, once again, is going to be the bodies. At least that's the way I look at it. I find that's a support. So come over here. And there's two ways that you can go in and trade this. You can, when we come back here and we test this area, and you say, hey, look, I don't want to be stuck buying this dog if we head lower. That's fine. You see it on this bar defend this level here at 45.54. And you're saying, okay, well, that's great. It did defend it, so that's good. The next bar, you look here, you say, well, you know, it looks a little bit bullish in the sense that it's not taking out the lows, and it looks like the market's getting tired. It's starting to lose its momentum. So at this point now, I think you can go in and put a long if you want to play it that way, and then put your stop just below the market now, because we've already tested it a couple of times. If it's going to push even lower from this key area, then the fall is going to really be a bigger fall, and you don't want to be in the way of that. So in this situation, after they've tested it, you see here, they've come down here, they try to put in minor bottom, but they were able to blow past here. Now they've tested it. They've knocked some people out. If we get back below that, this market is going to move a whole lot lower, because then it looks like now we're going to be challenging this zone. And then people are going to be saying, maybe I shouldn't be coming in, and they'll want this market to go back towards the lows to see what it's made of. So once we dip down in here, you can say, well, they defended it, and the market seems to be holding here and holding here. You could go on and step in and take a long, which would be right around the 45.60. If you want to play it a little bit more on the safer side, we'll highlight this. I don't know why it's getting that oval. Move it up here. There you go. So, well, like I said, if you're thinking, you know, I don't want to go and buy it now, maybe we're going to take another dip. So we defend this area and say, you know what, let me just give it one more bar. This bar looks, you know, pretty decent here, and you're thinking, you know, we're coming to this area, we have this area of support, the market, you know, has defended it here. You know, I think I'll go on and take a long. I think it's a reasonable risk here from this area. Fine, you can play it that way, or you can play it as we break out above this level. And you can see that they got back here to 45.74, and it wasn't even that high. And we came back and we weren't able to take this out here. Matter of fact, if you want to be even safer, play it even tighter, which I think would be a little bit too tight for crude. You could buy it here and say, if we come back halfway beyond this little zone here, then I'm out. So you could put it something like 45.61, but I think that is way too tight when you're trading crude. We talked about it's not a good market, I think, to scalp it like micro scalping, the way that Eurodollar is. But you can see that we start to launch off now. The market looks like who knows what's going to happen. You could put your stop back up here above this high, maybe make sure that you capture a couple of nickels on this, and then eventually start to go and work higher. But I just want to go on and share that is this, at least this is the way that I go on and trade. I try and match up the 10-minute with the 30-minute with the 2-hour, and all I'm trying to do is increase my probabilities on the trade. So let's move on to gold. Hang on, my screen too many times and now it's. Okay, here we go. I clicked the screen so many times that they got hung up. That's my bad. So let's go and take a look at gold. Yesterday, again, I was saying I just don't see anything happening with this market, and we did go on and start to slide. And we just, and if you look at it on a 10-minute chart, or I think it's also a 30-minute chart, it just looks nasty. It just drip, 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 drip. But we came into this 45 area, and we're going to go and take a look at that because that did have significance. Now, it wasn't like as if it rallied and took off and rallied to the moon. I mean, we did go up almost $5. But it's not like as if it hit there and just bounced off like a ball. But we'll take a look at where we came. This is our old breakout area. If you remember, and actually it was 44 but I have it listed as 45 because I saw the most touches there. But that's our old breakout area in this market. Whether it would turn the market once we got past 45. And we remember talking about this, and it was actually 44 that we had it marked off back then. And if we can break above that, that's really where it turns the thing bullish. And I believe at 1144 was a 61% of the move, and I think that was whatever. I think it was something like whatever the lows were. But anyway, I remember 1144 was key, and I'm pretty sure it was a 61%. And I said, this is a breakout. Yeah, and it was 1145 here. 1144 was the fib, and I'm pretty sure it was a 61%. And I said, if we get a close above that and 45, we can launch. And then we did get that launch, and then the market pulled back. We finally went up to the 1170 pullback. And 1145 has pretty much been the bias pivot, okay? And you can see here as they went up to 1145, a return trip back up here. We didn't make it up to 1150. 1145 is where the market ran out of gas on the return trip. And you can see here they found that as support on the way down. It's the same way that we were talking about, you know, even in the SPOOs. And that's the way that I look at the way that I go in and you know, look at my analysis. When I look at what I call the bias pivot, I probably should have it marked in red. Because it is a bias pivot. So is the 1170, but this 1145 is a bias pivot. So let me just go and mark that off. So you can see the significance of this 1145. Once we get past 1145, the market launches, and as we come back down here and we slide back, it's a battle. It's a battle zone, which is a key thing of a bias pivot. Because with the bias pivot, it doesn't mean that when it touches it, it turns around and heads south, or it goes through and it goes north. And you're going to see that quite often, because you can see as we got past 1145, it launches, it comes back for support, it pops back up. But also the significance of it gives it more significance is when you see it as a battle zone, because then you see the bulls and the bears really fighting over this level. So once we lost it, you see the acceleration to the downside, and you see it back here as a battle zone. So that takes us to where we're at right now, and you can see as the market has sold off from up here in the 80s, where did it find support here? 1145. Now it hasn't like turned around and bounced off, but this is where finally the selling quelled. So at the very least, as I said, if you want to, and I saw it in the Asian session, but I said I'm not going to fool with this thing, or coming to the Asian session, I'm not going to fool with it. I'm just going to day trade this thing. I'm not going to do anything with it. But it wasn't a bad area if you wanted to get long for $1, a couple of dollars. For me, it's not worth it, because one of the things also is coming into a Friday, I thought to myself, there's no way I'm going to pick this thing up, and then they decide to crush the bulls, and I get run the hell over. Because I was going to be asleep. I said, you know, there's nothing happening in the market right now. I don't want to wake up and see this market down $10, you know, and have the market run over my back. But like I said, I was concerned that this being a Friday, you see the flows come in and everybody's been proven wrong. Now they're going to jump out or force out of their position. But at the very least, you didn't want to go and be short this market. We'll have to see how today's action plays out. Obviously, the 1150 is going to be key, but probably ahead of 1150 is going to be right in here. You see that 53.5 is probably going to be the next key level. Right in here. $53.60, so we can mark that off. So we might be, I don't think we're going to do that, but if we get past 1150, you might get people pulling out the party hats thinking, okay, we're on our way, but I would think they're going to run into some trouble at 53.60. Okay. Now, on Fridays, I like to keep my trading light, but I do think that crude oil, one thing I like about crude oil, it's the one market that generally, no matter what's happening, you see now we're back up to this 46.40. You see some very good action. Now, like I said, right now, I don't have any trades on. I don't like to go in and trade while I'm doing the webinar. I can't keep I keep my eyes focused on those 10-minute charts. And it's going to, if I try and put positions on, it's okay if it's something like the euro, if we ran up to like 10.20, 10.25, 10.28, I don't mind putting on a position there. I'm not going to be worried. The euro's not going to run up 100 pips out of nowhere. But on the crude oil trades, I don't, like I said, if I'm doing the webinar, I don't like to go on and put trades on. But you can see we're back up here to this 46.40, which is where we talked about yesterday. Actually, I mentioned it. I did a Periscope, and I talked about the significance of the 46.40. And when we pulled back, the market ran back up here, and it just got a couple of cents above 46.40, and it ran out of gas, and then we started sliding back down. So we'll come back to this 46.40. I think the market's really overdone. As I said before, I think that with crude, you have to wait for those good setups, even on an intraday basis, but you can really get rewarded quite nicely. I just think that you have to do the math when you're coming into these trades to figure out, okay, how much am I going to go on and risk? How much do I think I can go and get a move on this, and what are my targets? Obviously, you're going to do that with all your trades, but I think that you have to be a lot more proactive when you're trading crude because it is so volatile. And so I think that, like I said, well, I guess it depends on your style. If you're more of a swing trader, it may not be as much of an impact. But I think as if you're a day trader / scalper, I think that when it comes to crude, because it swings back and forth, I think it's an excellent market to go on and trade. But like I said, you have to be a little bit careful. I think some people, if they're not very careful with their entries, sometimes have a tendency to get run over. But I think this is a fantastic market. It's almost time for Blake, so we're going to move in back into the FX. Crude, dollar CAD is kind of mirrored, not mirrored, but inversely mirrored what has been going on with crude overall. We did see a nice bounce yesterday as crude sold off. This area here, when we came into this zone, 31.31, coincided with the same time that crude was backing off from that 46.40 level yesterday. We'll take a look at this real quick. You see here, when we saw this move coming back from the 46.40 and sliding back down here, this coincided with the same time the dollar CAD put in his bottom and started working higher. Now you can see that crude's kind of steadied its ship, and now we're working higher. And actually, we've lost, you can see here that in the Asian session, we were losing the momentum here. And you can tell the market was really oversold. And I think the dollar CAD had that feeling too. And you can see dollar CAD has continued to weaken. Now, as crude started to accelerate, we're pushing a little bit lower here in dollar CAD. So once again, like I said, this is a way that uh, quite often this market will trade inversely with crude, obviously because energy is such a big factor in the Canadian economy. But getting back here to dollar CAD, this is a very key zone. This 30.38 to 30.31, we've tested a couple times below that is 31.08. We're going to do a quick fib on this. And you can see when they came down here yesterday, they came into this 38%, which is a 31.07, and we had a level here already at 31.08. They overshot it a little bit, but obviously this is a great pickup for those that did go on and pick up dollar CAD. I think the next key area right here is this 30.84. This is where I think the market will go to. We'll have to see how crude reacts to see what all happens, with dollar CAD, but I think that this will be the area where they want to move to is 30.84. I haven't done anything in dollar CAD with the exception of what was it, 2 days or 3 days ago when I got short up here. I wish I would have hung on. I didn't want to be exposed to the FOMC, so I got out on FOMC day with a few nickels, not a whole lot, but they really had my feet up to the fire up here, and I wasn't sure how the market was going to react or how they wanted to play out to that FOMC. Blake should be coming on, so let me just get ready for him.